Hey, Peter. Hello, Artu. Twin Traders, JR, Sebastian, Harbinder. Hey, Joe, Gigi, and Zach. Hey, Anna. Hey, the other. How was your day, guys? I'm looking at PLTR here, and it looks like it wants to drop and it wants to sell off. I have this writing here since the morning, short below 25, but I'm not sure if I want to short it below 25 right now because of these weeks, and especially because of that fake breakdown after which it got squeezed back up. So I guess I won't. I'll just be watching it. Great day, Sebastian. That's good. Half hour. That's not bad. Hey, Marvin. Better than small loss is also good. Two stops. Red day. Explosive blood. No trades better than red day, right? But it's okay. Even if it's red day, as long as you manage it, it's okay. Abby, you're killing it there. Yeah, of course. I can just quickly cover Discord like right now. And then we'll start with the review. So this is it basically. Announcements. Anytime we're having an issue with our website, any urgent announcement, it will be posted around here. Watch list, like self-explanatory, right? Member testimonials. If you're a BBT member and you want to write a testimonial, it will be appreciated right there. These channels around here just simply showing you the upcoming events, like the calendar, YouTube, newly uploaded videos, BBT news. This might be active whenever we're having any meetings or meetups coming. They'll all be posted right there. YouTube live, whenever we're going live on to YouTube. Suggestion, if you have any suggestion to add around here. This is where most of the action happens. Day trading chat, members posting their trades, asking about any suggestions about any trade. So I think this is the mostly used channel, and yeah, you could ask anything related question to trading around here. Spanish chat for Spanish members, support for any support you might need, specifically for that support around here. And you can use bot commands in the off topic. So basically there is an information chat, information channel around here. It shows you some useful bot commands, books, offers, and stock bot around here. What can you do in the off topic chat? Either chat about anything off topic, or you could ask, for example, type this command, popular. It will show you the most popular stocks for today with their change in percent. Gainers will show you, for example, the gainers. Earnings will show you the upcoming earnings, I guess, for today or anytime soon. And some other custom commands about the books, offers, and anything else, basically. This off-topic channel, you could use it for bots and you could use it to talk about anything else. Strategies, we're still working on it, right? For now, we're having only the parabolic reversal video with a few screenshots, and we'll add more. And breakouts video with one screenshot for now. What I like is that members are sharing their trades, and I think I'm going to start doing this. I'm going to post this trade for today there. This is from Zach. It's parabolic reversal. If a member sharing their trade with us in the day trading chat, and if it's an A+ setup, I'll be posting it in that category so that everyone can take a look at it and get familiar with the setup. And I'll definitely credit every member for the screenshots they posted. So yeah, for now, that's the best way to use it. We don't have voice channels for now, but maybe in the future or in the near future, we'll add them. Clap, if you want to join it, just go to beerbulltraders.com, go Discord. Thank you, Yonda. All right. Oh, so actually look at this. This thing did break below 25. We'll see if it's going to sell off right now. This might be an igniting volume around here, but I'm not taking it. So yeah, let's start with your trades. If I have time, I'll go through my trades as well today. Joe traded PLTR. Let me put this here, remove this, and that's basically it. So PLTR, let's take a look at this 30-minute chart. I like this actually. Honestly, I like PLTR to the short side below 25. But why was this a good long? Could anyone tell me? I like the short as well, and I like the long flip. Both of them were good setups. Why was it a good long? Exactly, Lenny. Fake breakdown. This was so obvious, but unfortunately I missed it. And this fake breakdown was also an engulfing crack on the 2-minute chart and the 5-minute up in range breakout. What happened around here? It dropped down, it pulled back, started coming back down. That was the retest area. And Joe decided to take it to the short side for a trend, maybe 24.50, which unfortunately did not work out. Now look at this. Small flat resistance, which is a small range on the 1-minute chart, 5-minute up in range breakout. This is our small range on the 5-minute chart, and you are breaking above it. Joe took it to the long side, which is also a new 30-minute high, and rode this all the way up. So I like that. The add around here was a little bit risky. It was a little bit late. Maybe if you added it around here, somewhere around here, on a new 5-minute high, which is the second candle, or immediately after the switch around here, it would have been decent. But this was a little bit late for an add. I think you noticed that, and you exited immediately after that. Yeah, good job. I love the management around there. Twin traders traded Can. Let's see what you did around here. So Can, daily chart, we have a gap down, and because of the gap down, I'm definitely going to be extra short biased rather than long biased. Let's take a look at the 5-minute chart. There is our range. Actually, let's take a look at the 60 first. Look at this. This is good. I love this so much. Decent range on this 60-minute chart. And we are short biased because of the daily chart. The break of the range on the 60-minute chart is a good entry to the short side. Where is that? $18. Where is our $18? There it is. What happens at the open? At the open, it squeezes up. Do we trade it to the long side? We don't. We wait for it to break down because it's more weak than it's long. That's our place to take it to the short side, which is the first 5-minute candle. And put your stop loss at the highs. So that was awesome. Now it's dropping down. You're taking it for a reverse ABCD pattern on the 5-minute chart on a bounce from the 9 EMA. This is good. I like it. Unfortunately, it didn't work out really well. It didn't even run down there, but the setup itself was really good. I like it. Let's take a look at the 1-minute chart. Yeah, unfortunately, on the one, it struggled a little bit, but the setup itself was good. It didn't work out, unfortunately. Just got like a good job here. You're welcome. Dardan traded Apple. Let's see this one. So looking at Apple, I personally will be more short biased rather than long biased. We're dropping down there. We're below the moving averages, below everything, right? On the daily chart, we are on a downtrend and we're on a gap down. Of course, there is always that fact that it could fill the gap and go all the way back up. But based on what I see, I'll be more short biased. Now let's take a look at the 5-minute chart. What did you do around here? Let's actually take a look at the 1-minute chart since this was an early entry, 9:30. I think you shorted it. Half our loser candle moved so fast. Okay, see that. That was unlucky. All right. So where is view up on your chart? View up, view up, view up. Is it the adapt the blue line, and is it this dotted line? Okay, I see this. This is similar to what happened in PLTR. I also was watching PLTR today, and I didn't take it to the short side. And I think that's the same thing on Apple. Let me show you that. So take a look at PLTR. Remember this rule. This is what I usually say. Best breakouts are those breakouts which happen when the stock is close to view up. Okay. On PLTR, we were close to the 9 and the 5, and that was a decent reverse ABCD pattern, and it made a nice breakout. Actually, it's totally fine. But unfortunately, it was far from view up, and this is the main reason which didn't make me consider it taking it to the short side. Apple, It looks to me like it did the same thing here. You see that's view up, and it's giving you that decent reverse ABCD pattern, right? But the same thing, it's a little bit far from view up. So I added this rule recently, and I might update the webinar, but not soon enough. I don't think it's worth updating the webinar only because of one rule. But your best breakouts are those breakouts which are happening when the stock is close to view up. If the stock is far from view up and you're having some other stocks which are on your watch list and they are close to view up, better watch those stocks which are close to view up. I traded APHA and I don't remember what else, right? Yeah, right. You see, if there are stocks which are close to view up, just better keep an eye on them. Now let's go to your second question. Would you have taken this reverse ABCD pattern? I was hesitant because there was no clear W shape. Let's take a look at the 5-minute chart. So look, this is the 5-minute chart and this is our approximate range on it, right? This is approximately the range on it, around here to here. Now, this thing is breaking on the 5-minute chart. This is the first 5-minute chart. This is the second 5-minute chart. And this is the third 5-minute chart. And what do I say? Best entries are usually on the first 5-minute candle, decent entries on the second, and never entries on the third 5-minute candle. If you can manage to get an entry on the second candle, and there it is a reverse ABCD pattern on the 1-minute chart, on the second 5-minute candle, then yes, you can take it. That was decent. If this thing happened here, I would not take it because it's the third 5-minute candle. Make sense? Awesome, you're welcome. So Avi, what did you trade? Fallen Angel setup. It gapped up with volume. Let's see, do you have the daily? Yeah, I see it. So look at this. I like this a lot. And this is what Avi is doing. Stock gapped up. He's waiting for a drop on it. And then he's taking it with the direction of the gap. This is the second trade review in a row, and this is the same setup he's doing. Is this your main setup, Avi, on your trade book? Or it's just a coincidence that we're reviewing the same trade a couple of weeks in a row? This is your only setup. I like it. Look at this. He's just developing his new setup. He calls it Fallen Angel. It's not literally Fallen Angel, but sometimes it is. But I mean, we don't care about the naming, right? Stock gapping up, dropping down, holding a level, $9 round, 200 moving average. It's not making a new 60-minute low. He's taking it to the long side with a really tight stop loss and a nice run. I love this. This is really good, Avi. You see, guys, we're all in the same community, but the setup which Avi is trading is a setup we don't have a webinar on. He just found something which is happening many times or frequently, and he decided to develop a trade book or a play on it, based on it, and trade it every single time. Good job, Avi. And this actually will open my eyes now as well to something. I told you, when I'm doing these trade reviews, it's not only helping you, it's also helping me. I love seeing different styles, different trades, different trade books, because this will help me knowing if someone will be getting into the long side against me. Let's say I shorted it around here, then I'll see what's happening. The stock gapped up, but it's dropping down. We didn't make a new 60-minute low. We're holding a level. This is actually a setup Ivy trading, and maybe some other traders who notice this, like Ivy are trading it. There is literally no reason for me to hold it to my break even or to my max loss. I should just bail because that's a setup forming against me. Thank you for sharing this. So this is Zach. He traded plug twice. Both of the trades were good. The first trade was a little bit early on an entry. Look at this. What happened on plug is literally what happened on PLTR. At the open, we're having a fake breakdown. After the fake breakdown, we're squeezing up. Now, the problem around here, we were still below the half day, and it could have just simply did this and dropped down. The entry was a little bit early, and I guess Zach realized that the entry was early, so he just didn't want to take the loss, and he bailed on it. If you waited a little bit around here and took it to the long on this candle, that would have been perfect, right? You are making a new 5-minute high. You are breaking the high of the day for the moment after fake breakdown, and you will get this decent run. Now, you miss the breakout. You think that the risk to reward is not suitable for you, but you don't chase it. And I love this fact. You've been watching it patiently. And now look what we are having right there. 1, 2, 3, 4. 4 consecutive candles. And the moment you see 3 consecutive candles, you need to wait and watch it for a reversal if you're trading reversals or parabolic reversals. Or you just do nothing, wait for a pullback to catch a continuation. You don't chase it. Now, this was the 3rd candle around here, and I personally will not take it for a reversal on this or this. Why is that? Because we're just breaking out, and we could retest before a continuation. Simply, the risk to reward is not there. Now, look at this. A wick around here, and it's resisting it one more time, taking it to the short side for a parabolic reversal. That's maximum the stop loss, and that's the reward all the way down here. One thing you could do is always leave 5%. It's not a must on parabolic reversals. On parabolic reversals, if you hit the 9 on the 5, that's it. Where is the 9 on the 5? It's down here on your chart, right? This is the 9, I guess. Yeah, always leave at least a few for the 9 on the 5 in case it reaches it. After the 9 on the 5 or after it's touching the 9 EMA, you could either exit 100%. It's fine. Or you could leave a small position in case it drops more. Now, if the stock did the average true range, you might want to hold on to it for a bigger run. Cool. So if you're taking it to the long side around here, your stop loss will be somewhere around here, half of the candle, just in case it drops more. You definitely don't need to have it all the way down here, because this is a breakout, right? It's similar to the engulfings, where you're taking it on the next candle, but you don't put your stop loss at the low, you have it in the middle. Yeah, awesome trade, Zach. This was really good. I like it. Let me share with you like similar trade, guys. Of course, Zach managed it better. He got the reversal from the first time. I traded LI, and of course, I didn't leave anything. I just bailed at the 9. But look at this. Let me remove this. This is annoying. Come on, remove. Cool. So look at this. Stock did the average to the range to the long side. Overall, on the daily chart, we are dropping down. On the 5-minute chart, what do we have? 1, 2, 3. 3 consecutive candles. Now that I have the 3 consecutive candles, what am I doing? I'm looking for a short. So shorted it first time based on what I saw on the time and sales and the level 2. Didn't work out. Revenge trade, that was really bad. Get subbed out one more time, so I'm down 2 hours. Now, I didn't short it immediately around here. I decided to be more patient this time, so that this time it's working. Shorted with an add and partialed all the way to the 9 on the 5. Once I reach the 9 on the 5, I'm out 100%. But remember, if the stock is making the average to range in the daily, and especially if it's going against the favorable direction of the daily, you could always leave small position, because it's highly unlikely that it will break the high of the day, especially with an entry at the high of the day. It could go a little bit up before dropping back down. Zach, 3 attempts. I will not revenge more than 3 trades, because this could get you so emotional, because an entry could be one after another in a gap of few seconds, 15 to 30 seconds, right? So there were 2 trades here in, I don't know, in a period maybe of 20 seconds. Then I waited for a minute and a half, and I took the 3rd trade. You can't just take it 5, 6 times and get, I don't know, to max loss after a good day, because you were forcing a reversal, which sometimes doesn't even happen. 3 trades, it doesn't work. Close the ticker and stop watching it. Because I started my day well. I got 2 hours here on APHA. I don't remember what's the second stock I traded. What was my, Riot? Yeah, and I got around 2.5 hours here on Riot. So I was up around 4.5, and because of those 2 reversals, I was down, and I was up like 2.5. Now, if I just keep taking it multiple times, I'll just give all my profits back. So 3 attempts, the 3rd attempt worked out. I ended up 5.5, happy with it. If it fails 3 times, just stop watching it, and that's it. And you can see like 1 trade on Riot, 1 trade on APHA, 3 trades on LI. That's my 5 trades for the day. I don't take more than 5 trades for the day. most of the time. R2, let's take a look at your trade. So you traded ABCD pattern type 2 on NIO. Curious about this one. Do you see an M shape on the 1 minute chart before an entry? Trying to define MW. Okay, so for this ABCD pattern, it looks like an ABCD pattern, but you definitely need more than this to determine whether you want to trade it for an ABCD pattern or not. Now, this around here is not a good candidate to trade it for. Actually, it's not bad as well, honestly. Let's take a look at this. Yeah, overall, actually, it's not the best setup for an ABCD pattern. It's not the worst as well, because you broke the range on the 60-minute chart. But remember what we said? What is this around here? This is a fake breakout. And fake breakouts are most likely to form against the favorable direction. And here you can see clearly that we are dropping down. Because we are dropping down, I will not be interested in trying to catch a trend to the long side. I might try to catch breakout just for a quick scalp, but I will not be forcing a trend against it. And remember the main rule on ABCD pattern? You want to take ABCD patterns with the direction of the daily chart and with the direction of the 60-minute chart and not against it. You could see that we had a fake breakout there, we had a fake breakout there, we had a fake breakout there, right? And what could make this thing different around here? If it was fake breakout 3 times, I mean, it could be a 4th time right there. Your percentage of succeeding is this will be 25% if this works, and that's not a good risk to reward. Catching a reverse ABCD pattern there, though, would have been a decent one if it gave us that setup. In terms of how it looks like, yes, it looks like an ABCD pattern, definitely, and you could trade it, but there is more to a setup than just a look like a setup. We will not be taking a double top because it's looking like a double top, right? Or head and shoulder because it's looking like a head and shoulder. You need first of all to identify the possible direction of the trend and then wait for the setup to that same direction. Hey, Mitch. It's totally fine. We are learning here, R2. Thank you for sharing that trade. So Peter traded Walmart. Now this happens, guys, and to be honest, just this happens to the best of us. And thank you, Peter, for sharing this. And I showed you that day, like I think a couple of weeks ago, where I had a similar day on Twitter. I bet Peter is not proud of this, right? This is the chart which none of us would be proud after we're executing the trades, right? The setup around here, let's take a look at it. This entry, I would be fine with it, right? Because you're having a setup, bullish engulfing sandwich. The bullish candle gets engulfed by bearish candles from 2 sides, and then we take it to the short side. So Peter took it to the short side, and it failed. Re-entered one more time for this, and it broke down. This time, it got him stopped out. So, okay, the first one, I would say it's fine. The second one, not the best, but okay, this is still decent. Why is that? Because at least we're breaking down. However, looking at the wicks, I'm not so keen about it, but okay, let's say this is also fine. Now, starting from here, it's just revenge trading, right? Revenge trading and getting stopped out, then another revenge trading and getting stopped out. Bitter. Yeah, that's true. You need to be honest. But yeah, look at this. First trade was totally fine in my opinion. It broke down. It was close to view up. You had a setup. You took it to the short side, got you out, started coming in your favor. You didn't want to miss the move, especially after you were stopped out. Gave it another chance, but now you're having a fake breakdown, and definitely you don't want to continue revenge trading on it. But still, thank you for sharing this. Short stop, short stop. So yeah, look at this. The first one was fine. The second one, this was not ideal. This here was fine. And this is not ideal. But yeah, thank you for sharing this. You know what mistakes you did right there, but this happens to everyone. Oh, so Mitch, you also got caught on Walmart. Yeah, I see that trade. Look at this. This is Mitch, but this is definitely better management, right? So Mitch trying it to the short side. It doesn't work, and that's it. this is the way we need to try to trade it, right? If you see a setup, you take it. If it gets you out, just don't get emotional because of it and move to something else. You could give it a second try sometimes, right? I mean, third try if it's like so clean and if you see that it's actually working. But I believe more than 3, it's just too much. Joe. So Joe traded NIO. Now look at this. This is exactly what we said, that fake breakout around here. Let's see how you traded it. So you tried the long on it first, right? You tried the long and it got you out. Same thing, that ABCD pattern. Just remember these guys. I mean, those will be working. Why are you taking this setup around here? You're taking it because it's working sometimes, right? Even if it's against the favorable direction, even if it's against the bigger trend, there will be time where it works. But you need to ask yourself this question. And if you don't know the answer for it, go back and do some statistics. How often do these trades, which are going against the favorable direction or against the overall trend, are working? If it's over 50%, you have the total right to take this trade. But if it's less than that, then you're just gambling, because most of the time you'll be losing. And when trading, we're trading to make money, right? We need to trade with more than 50% probability of our trades to work out. I like your second trade. The second trade was awesome. Why is that? Fake breakout. You realize that. You see that it's going back into the middle of the range. Took it to the short side. Had your ad partial around here. Small reverse ABCD pattern. Let's take a look at the 5-minute chart. Now look at this. This is just a little bit. This is not bad ad, but it's tight stop loss after the ad. We know that the 9-moving average is around here, and the stop could get closer to the 9 and the 5 before a continuation. So whenever you are adding, make sure that your stop loss is still having some room, or your average is still up there to survive the pullbacks. Because unfortunately, because of these ads, you missed the big move down here. Awesome, Joe. Is that an M shape? Where is it? This around here, it's not literally an M shape. You could see that it's like this. You see, it's just curling. I know that you could see those bottoms from here. They're making higher highs, and then it's dropping down, then higher high and dropping down. But it's not an M shape from the upside. From the upside, it should be like this. But it didn't do that. It's like this, right? Now again, it doesn't mean that this is a bad setup around here. This is around here is actually a 3-bar play, and if you were patient a little bit and you forced it around here, that would have been a good setup. You're having wide bar candles, then you're having a doji, then you're having a new low, which is close to the 9 and the 5, with the overall trend and with the break of the 60 at the same time. You could definitely give it a try around here for a ride down. There was Nadia's trade. I think this is Nadia's trade. Yeah, PLTR. So let's take a look at this thing. This is similar to Avi's trade, right, Avi? You were watching Walmart, Peter. But don't worry about it. We all have those days we're watching the wrong stocks. Sometimes when we are getting to max loss, it's not because we are bad, and it's not because the market is bad. It's just simply because we are watching the wrong stock. Now, PLTR, what happened to this thing? It gapped down. And we know, because it gapped down, we are more biased to the short side, especially looking at this. It's down, and I'm definitely more short biased. Now remember, the gap down doesn't mean that it's necessarily going to go down. It could fill the gap. What happens at the open? It goes up, and it goes up closer to the moving average, closer to a level you had. There is blue dotted line. I see that you marked a level around this blue dotted line. It holds it, starting to drop down, and you could see that it's changing the trend slowly, right? It's changing the trend slowly. You took it to the short side, and I love the patience on it. You held it all the way to the next level you had. This is awesome patience, actually, Nadia. I love it. Now, one thing, though, which could have been risky about this one is this. You took it to the short side against the 9 and the 5, and we know that stocks, especially on an ABCD pattern, they could pull back into the 9, form an ABCD pattern, and then break out. That's why I personally would have preferred this entry around here, because you see an ABCD pattern around here, which is trying to work after the hammer, but unfortunately after the hammer, it's forming double dojis, and it's coming back down with a possible entry around here and a possible stop loss around there. Next thing you could have done to make this trade even better, adding around here and moving the stop loss into this level around here, right? But other than that, I love the management. You are really patient about it. Now this exit around here was also not necessary. Why is that? Look at this, the moving average. We know that the stock could pull back to it, reject it, and then drop down, especially that now you are going with the overall direction. If you are going against the overall direction and it's starting to pull back and go against you, you could definitely bail the rest on the new 5-minute high. But if you're going with the overall direction, just hold it, because you could just simply make a pullback and drop more. And we saw that it broke 25, right? Eventually it did break 25. Nice trade though. The Handsome, let's see your trade. You're welcome. So Handsome traded SUPV. This is awesome. I love it. Look at this. Close to the 9 and the 5. It's hugging it. Now look at this. You might tell me this is 3 consecutive candles. Why would you take it on the 4th consecutive candle? Remember the exception? One of the exceptions to taking the trade on multiple consecutive candles is if it's hugging the 9 and the 5, or if it's close to the 9 on the 5-minute chart. The next thing, when you're looking at the charts, you need to identify 3 types of candles: small candles, average candles, and big candles. Those you can identify them looking at the chart itself, and you could see that the small candle is this, the average candle is this, and I bet you had some of those in the pre-market. If you zoom out, you can find those candles, and the large candles are similar to these. If you're having 3 average medium candles, yes, you don't want to take it on the 3rd candle. If it's squishy candles, then you could take it on the 3rd, the 4th, and sometimes even the 5th, because it's just taking so long to consolidate, and it could just take closer to the 9 and the 5. Now, along with that, you're having an ABCD pattern on the 1-minute chart where you had your entry and add at the breakout and nice partials all the way up. Really good job here. Sebastian, FSLY, let's take a look at this thing. So daily chart, gap down, like we said, if the stock gaps down, we are more biased to the short side rather than to the long side, right? Now let's take a look at the 5-minute chart. What do we have around here? So multiple consecutive candles to the downside, and you are trying a parabolic reversal, I see, right? Now that's smart decision. I like it. Entry just a little bit late. Remember, on parabolic reversals, you want your entry to be as close as possible to the low, because each cent matters. If you have this stop loss and you get this move, that's around 3 hours, right? If you get this entry and this move, that's around 1 hour. You see how this small gap around here giving you extra 2 hours? So yeah, an entry earlier would have been helpful, but the trade itself, the thought process, it was awesome. I like it. Now, what do we have after that? It doesn't work. It continues to drop down, and we are forming a fake breakdown on the 5-minute chart with a doji at the low of the day. Now look at this. It is a reversal candle at the low of the day on the 5-minute chart. This is even better than the 1-minute chart with a new 5-minute high. Now we're most likely going into the 9 and the 5, because the reversal candle on the 5 is way stronger than a reversal candle on the 1. On the 1-minute chart, you are having a range with a break fit. This is an awesome entry, and this is the stop loss, this the middle of the range on the 1-minute chart, and ride it into the 9 and the 5. Again, a little bit of a later entry, but the thought process is good. Finally, you're taking it to the short side. The short is also good. Why is that? Because you're having a reverse ABCD pattern, bouncing off the 9 and the 5, and we know that parabolic pullbacks, they go into the 9 and the 5. You know that. That's why your partial was at the 9 and the 5, right? Oh, not short. Oh, so this was a long. I see that. Okay, then this long, I personally would have avoided it, because we know that at the 9 and the 5, it could bounce and it could drop after that, make a reverse ABCD pattern. Now, that's not necessarily happening, because I see on the daily chart, we already did the average true range move. And usually after the stock is doing the average true range move, it could pull back even more or make a bigger reversal right there. Now, long, better to be avoided. Either short if it's giving you a setup to the short side, but still, I will not take it to the short side. Why is that? Like we said, average true range was already made. You can't force a stock to drop more than it usually drops. Yes, Salim, this will be recorded. Thanks, Peter. Yeah, I'll upload it as soon as possible, either today or maximum tomorrow. Good job, Sebastian. Dell traded NIO. Let's take a look at this thing. 1 minute chart, 2 minute chart, 60-minute chart, and the 5-minute chart. What do we have in NIO? We discussed this. We're having the range. What did Dell do? Okay, so you missed the short for the breakdown, but you see that we're having multiple consecutive candles in a row. 1, 2, 3. Right? I mean, it could be even 4, 1, 2, 3, 4, depending on how you want to count them. I personally start counting from the candle closest to the 9, but you could always start the count from the candle even higher than the 9 or the 5, because stocks, they eventually need to make pullbacks. Now look what's happening. It's dropping all the way down, getting the increasing volume at the low of the day. This is an awesome entry. I love it. I know it's so hard to get these type of entries. You need to be watching the time and sales and level 2 closely, just to identify that there will be some change in orders going in the time and sales. I can't really explain it. You need to watch it, but I like the entry. The entry is definitely good. There were signals. As I told you, if you see 3 candles, start looking for reversals, especially if they are average and big candles. Climactic volume, another good level, another good indicator. Your signal on the time and sales, get the entry, stop loss, and this is giving you an awesome risk to reward. Really good job. Nice ad because your average is way low down there and you got a reversal all the way to view up with another ad. That's good. Look at this. And you go all the way back to view up. So look at these guys. Starting with this risk, getting this reward, adding, because the average is so low, getting another reward, adding one more time, and getting more reward. How many R's did you get in total on this one, Dell? I'm really curious. It should not be less than 5. 6 R's. Yeah, I see that. Yeah, but because of the partials, I mean, they definitely should not be less than 5, depending on how big the partials were. Awesome one. And I could tell that we already did the average true range move on this thing. You could see that it moved from 56 to 52, right? That's $4 move. And on NIO, that's basically the average true range. And if you catch a parabolic reversal at the average true range, and I'm definitely including this on my next webinar. By the way, guys, I told you I will update the webinar in May. I will do it in the beginning of March. So it will not be that far. There will be some few new information which will help you increase your win rate on those parabolic reversals. So yeah, I hope it will be in the beginning of March. Some guy, you traded TLRY, ABCD pattern, type 1. Now let's take a look at this thing. I like this. We're having a double bottom on the 5-minute chart, squeezing all the way above view up. There is our moving average cross. Entry a little bit late. I personally would have taken it immediately on a new 1-minute high once you're breaking this level around here, support, resistance, and then you're breaking it one more time. So yeah, an entry around here would have been enough safe just earlier to get a good risk to reward. Entry around this level, I think you wanted to get at the breakthrough level just to be safe, but this really ruins your risk to reward depending on how far you put it. But I think this around here or this around here would have been the tightest for stop loss. I think here at least. 1 hour, but still not a bad trade. Better to have entered a little bit earlier on it. The target was definitely good. Look at this. Level around here, and like Andrew says, those levels are magic sometimes, right? Exactly, that's what you said. That we said. You could have definitely entered at a better position, but still, your thought process was right. I know it's so difficult sometimes to identify the setups or read the price action real time and make the decisions real time, especially at the open when it's so fast and when you are watching multiple stocks. But with time, it becomes easier and it's more natural. Alban traded CCIV. Let's take a look at what you did right there. So you took it to the long side. Now that's not a bad long, but remember this. You took it to the long side below the level, right? Below the intraday level. And if you do that, you always need to have technical levels as your stop losses. And that's here. If you take this entry at the break of this level around here, then yes, you could play it as a momentum play and go with a tighter stop loss. Like let's say that this is the candle around here. You take it for the break, your stop loss somewhere in the middle of the candle or maximum at the low of the candle. But entering before the break, you definitely need a good stop loss, which is around here. Because the stop loss was tight, you got subbed out once, you got subbed out twice, and then those are really tight stop losses. Remember, never put your stop loss within the 1 minute candle. It's just so tight. You need to give it some extra room. I know you made all the losses here. Looking at how tight your stop loss is at, I bet you were even higher than the goal at this move around here. But focus on tight stop losses just to minimize your risk. If you have your stop loss around here, all those 4 losses would have been only 1 loss. Now, if you will re-enter around here and still have your stop loss at technical, instead of at the technical level, instead of having another loss, it will be 1 winner. Look at this: 1 loser, 1 winner, 2 trades. But still, thank you for sharing this. I know this happens to everyone. Maybe you are not trading like this every day. It's just a day where when we lose a couple in a row or maybe 3 in a row, we want to make the money back so fast. And I could tell that you try to make it back because I see a heavy entry around here with multiple ads. You want to make all the money you lost right there on this trade, right? Just don't be emotional. It's totally fine. This happens. Learn from your trades from today and try to make them better the next day. Look how clean this was on the 5-minute chart, right? Sort of a range around here. ABCD pattern type 1. That's our entry. That's our stop loss. Nice run, right? Now we're dropping down. No need to trade it to the long side. Wait for the W shape. No W shape. We're breaking down. No need to trade it to the long side, right? We're just trending down. Those trades are also unnecessary around here. Oh, CCIV yesterday it was choppy. I agree with that. But still, thank you for sharing this, Alvin. Salim, actually, I'm making a webinar and it will be next Tuesday about candlesticks and candlestick patterns. I will show you how to trade those. You don't need to get long every time after a hammer or every time after a shooting star. You need to implement them with some other indicators and a setup overall, but and a setup in general. But yeah, hopefully in like 5 days, the webinar will be ready and I'll present it there. By the way, a hammer at the high of the day, it could be a reversal candle. It's called the hanging man. If there is a hammer at the high of the day, and then it's breaking the body, it's a reversal candle. You see? It's not called the hammer at this place. At this stage, it's called the hanging man. Why is it called the hanging man? Like a hand, head, and a hand. This looks like a hanging man. Let me quickly share with you the trades